Good morning, everybody. It's Max. How are you guys doing? You guys ready for the daily covered caller? Let's see how the markets opened up. It looked like everything was up when I checked a little bit ago. Let's start with NASDAQ. Well, there we have it. It opened above the profit box. Wish it would have been up here yesterday. Could have avoided yesterday's loss. It's trading sideways. So here's S&P. Look, S&P's on the high for the day and above the profit box. And then here's Russell. Look at Russell blowing up. And here's USO. Gosh darn it. Look at that. Now, USO has options that expire tomorrow at the 72 strike price, which is right here where the top line is. So they're right there. They're almost a max profit today. Okay, so for triple QI, these guys are going for $1 million winner. Look how many winners they've had lately. This will take them to positive 57 cents a share on the month. Dividend estimate $2.54 or 84% yield. JEPY, on the other hand, it's a smaller fund. It only has 97 million under management. They're going for 338,000. They're on a string of winners also, and they're up 21 cents a share on the month. But the month started off rough. These guys lost $2 million on the second day. It's one of their biggest losses ever, but they've just come roaring back. Dividend estimate 243, which equals about 67%. Now we'll look at IWMY. These guys have about 125 million under management, so they're a little bit bigger size fund. Let's see here. Contract sold. This is all jacked up for some reason. In any event, these guys are going for $1 million. They're realizing it as well easily. They're ahead 46 cents a share. They're coming off a string of huge winners. This would be like their 8th in a row. Things are going great for these guys. Let's check out over here to USOY and see what their dividend estimate is. It's $1.09 right now for their dividend estimate. They're going for a $320,000 winner. They're also coming off a string of 2 wins. If they get this winner, it would make them 25 cents a share positive on the month. So that would be nice, right? Yeah, it would be very nice. All right, these underlines right here, AIYY, AMDY, AMZY, Coney, GUI, JPMO, MRNY, PayPay, whatever it is, Sky, are underlines that have uncapped upside, at least as of yesterday, in the YieldMax universe. So this is good. They have about 28 stocks. It looks like about a third of them are uncapped. Here's the option strike they sold. Here's the strike they bought. Like, for instance, let's look at one of them just for fun. The top one, I put the top one in here, called it Uncapped the Upside AI. But it's the AI is the name of the underlying stock, and this is working out great because the market's moving up. Okay, so this is what the profit and loss graph looks like of the call spread. All right, now let me show you by comparison. We're going to we'll duplicate this tab, and then we're just going to make this one disappear, or we're just going to remove it. Okay. Here's the profit and loss graph of a call spread. So these guys at YieldMax, they own a synthetic, which represents the underlying, and then they sell a call. They sold the 23.5 strike for 30. They sold it for 36 cents, I think. And they bought the 24.5 for 16 cents. That's in the spreadsheet. Yeah, well, 39 and 15. It was close. But in any event, we can follow it. The underlying is AI. When you're doing a covered call or a covered call spread, especially a covered call spread, it's a bullish strategy. It's even more bullish than the covered call. So you just want higher prices. If the market does go down, you want the dip to be bought. You're just rooting for higher prices. If you're just doing the covered call strategy, you can also root for stable prices or sideways prices. But in the call spread strategy, you're just rooting for as high as possible. That's why people ask on SPY T and triple QT, or I always tell people you're just going. It's the same philosophy as owning SPY. You aren't worried about anything. You want it to be up as much as possible every day. Don't worry about anything else. And that's the way with the YieldMax stocks that use call spreads, that's the same thing. You just want them to go up. That's all it is. It's just like a normal growth stock in that sense. Okay, so let's compare the two though. Now here is an overlay. The dark green is just the call, the covered call by itself, and the white is the call spread. So you can see just the covered call itself is almost always a better option. If you lose money, you lose less than the call spread. Okay. And if you make money, if the market goes up, you make a little less than the call spread. And the reason is because with the call spread, you have to buy another option. It's an added expense, right? Well, let's go back over here. But the trade-off is when you get a move that exceeds 4.2% in a week, in this case, that's the upper bound of it. But if you get, say, a 6% move, then you have a profit that the covered call wouldn't have. So let's just do that here. Here's a 6% move. The covered call would make, $86 a contract, and the call spread would make $112 a contract. Okay, so call it 90 and 110. It's 30 difference on 90. It's a 25% bump just on a little extra move. But the real key is the upside is uncapped. So if you get a total outlier move and up, an up 10% week or something, the difference is gigantic. All right. So anyway, we're going to keep following those every day too. So right now the upside is uncapped on, we'll check out one more. So AMD, so we'll check out AMD, or a lot of people own AMC. We'll check out AMC. So AMC, they have the 187.5 sold and the 192.5 bought. So let's just look at this real quick. Let's just put this in. Won't take any time to put it in. I just start by saying build covered call to do a call spread. Look at this. Jay invented something that's not in here. Show me in here where it says covered call spread. It doesn't say it. It's a genius. It's a genius deal. I mean, obviously he didn't invent the spread, but it really hasn't been used in this way. Yes, I know that the guys over at Neos have it in the prospectus, but they haven't been using it. They're saving it for a low vol environment when they might use it theoretically in the future. I've seen somebody ask them. Jay's the first person to utilize it on a daily basis, and it's a genius freaking idea. I'm in love with it. If you guys can't tell, and I'm going to make more content on it. So it gives you the best of both worlds. I still think it gives you more yield than you need. I've always joked that no one needs 60% yield, and it's true. That's ridiculous. No one needs that much. Okay, but when you use the call spreads, people do need 20% all day long. People need 20%, 20 and 30%, and these can make it pretty easily with a lot less risk. So I'm really, really happy about that. All right, so let's get back on the track here. So Amazon, I was going to show you covered call spread. So first we have to look, what was it? It was the The short leg was the 187.50, long leg 192.50. So you go here, you just do a call with the 187.50. There it is. That is the trade right there before the call spread. All right. Then all you do is you hit add by call, the 192.50. I could go in and punch in the right prices, whatever the actual fills were, but I'm just trying to illustrate the general idea of what we're rooting for. So we're rooting for a blowout week in Amazon. We're looking for, in this case, we want over 192.50 because that's where our upside starts again. Okay. But if we get under 190, if Amazon doesn't move, we still make $116 per contract. In this example, if Amazon moves down, Amazon would have to move down more than 1% before this example would lose money. You can see there's a tremendous built-in advantage to selling calls and even call spreads. Amazon could move up, you still make the same amount of money, move down, you still make the same amount of money. But in the case of an outlier week, an up 5% week or something, and Amazon gets them occasionally, this trade would be worth $711 per contract. But like Jay said on Kamir's broadcast the other nights, you have to be comfortable with stock risk because there's no way to get around it. You're taking stock risk. If Amazon drops, even though this is a great idea, you're going to lose money, just like somebody that owns Amazon shares. All right. So let's see, but we'll keep an eye. Let's save that trade. We'll kind of watch these. We'll kind of watch these trades. Okay, so let's see what else. Let's look at the buffer report. We've looked at the uncapped, the upside report. So now let's check out the buffer report. I'm also going to start predicting Round Hill's dividends. This is the spreadsheet I'm working on. It's not quite ready yet. By tomorrow morning, I'll be predicting those live, or by the end of the day, just like I do on Defiance. Okay, so let's look at the new buffer report. All right, let's see what kind of standouts we have. Well, as usual, it's Maxi and YBTC. Look at this. Is Maxi really up 3.6% right now? I really just need to take it off because it's always up so much. It just messes up the scale. All right. Clip is a standout today, as is ULTY, as is iSpy. Nice job, guys. Looks like the other stuff's in line. It looks like a good day in the market. All right. And we also wanted to look at this chart really quick. I updated this morning. Okay. Now this is each individual stock cumulative change for the month. So I always start over here on the left side. This is S&P. So the first day of the month, they were down 2%. But then the next day they were down 2.2 between the first 2 days. They got, by the fifth or sixth day, they were down 3.5%. Now they've rallied back and they're up a little bit right now on the month. SVOL went down and came back, is not quite back. ZIVB, not even close to back yet, is still down from the first couple of days of the month. You can see THTA is really the best one on the board. JEPI looks really good. JEPY is about to make money. iSpy is looking good. iSpy is above water. You can see some of these didn't even lose that much. Like JUPI barely even lost any, compared to some of these other ones. But this gives you kind of a visual representation of how your fund is doing. And I put some funds up there that kind of represent, that a bunch of funds that a bunch of us have. I know a lot of people are interested in XDTE, and here's it right here. It went down, although not as far as the other ones. It's come back, but it's not up as far as the other ones yet. For whatever reason, like I say, THTA and JEPI are looking the best right now on this chart. So we'll keep an eye on that every day as well. All right, now let's look at the charts and see what's moving the most today. All right, we got VIX down the most. Hang on. All right, so let's look at the volatility model really quick. Well, it's still bearish, actually. I thought it might have switched to bullish. In other words, getting whipsawed. Nothing's really going to matter until the announcement tomorrow. What happens with interest rates. The market's probably just going to chop in front of there. But no, it's still on double red. Longer time frame red, shorter time frame red, just for what it's worth. There's a longer time frame, shorter time frame still on sell. Okay, so but whenever VIX crashes really hard, or VIVIX or VIX futures, it'll sometimes throw this system back in the camp of a sell. So when I saw VIX was down today, I thought maybe this had switched to bullish, but it hadn't because it's not down enough. Okay, so let's see what else. But basically, other than that, other than VIX being down and the inverse funds, everything looks good. Let's see what's up the most. Look at this. It's great to see Bitcoin up the most. Let's get rid of this volatility model real quick. Look at that. That's a 30-minute chart of Bitcoin. Look at Tesla romping today. I'm surprised the volatility system hasn't switched bullish yet. I'm glad it hasn't, but with some of these big stocks being up and them selling volatility, if it keeps doing this, it will switch to bullish. But there's Coinbase recovering nicely. Here's ARK. That's nice. Took out its previous high. That's really bullish. Coney's still dealing with this gigantic gap right here between Friday and it could have partially been the it was probably just the dividend. Let's look here. Adjust data for dividends. Yeah, it actually gapped up. If you put the dividend back in, if you factor in the dividend, because you didn't lose the dividend just came out of the NAV and went into your bank account. So once you factor that, the actual makes quite a difference here. It actually was a gap up. That's kind of crazy. I usually look at it with the dividends off, though, just by default. Right. Better to be safe than sorry. But you have to remember that, hey, the dividends are off. And, that makes a gigantic difference because that right there, it wasn't a loss. It's money that's going from here to your bank account. Okay. So what else we got shaking here? ES, Tesla. Of course, Tesla's up because Tesla's up. Russell's up. Google's up. Look at that. Nice job on the high for the day. What's going on with GameStop? Had earnings last week. All right, guys. I appreciate y'all for being here. Hope I remember to cover everything today. Did we look at the buffer report? Did we look at just the old school buffer report? I mean, I think we did, but I have so much new stuff I'm working on. Where is that old buffer report? See, oh yeah, this is a new one also. Yeah, I'm glad I didn't let you go yet. Here's a single stock buffer report. The benchmark is in red on the right, and the high yield fund is in left. So let's see who's outperforming their benchmark. No one really at this point in the day, and we don't really expect funds to be outperforming the benchmark, although on the downside we do. But nothing's really down today. We could excuse me, we could say SMCY is definitely outperforming this benchmark by 5 bips. That's great. Unfortunately, DISO's underperforming, but or GDXY. Here's the contrary example. They're outperforming the benchmark on the downside. Look, market's been open just over an hour, so this stuff means more at the end of the day. We'll check out this new single buffer report at the end of the day, and we'll also check out the uncapped upside report at the end of the day, and we'll see how everything's doing. If you look over here, here's yesterday's out of the money percentage. We want these to be all green because we want these all to freaking go in the money because we don't have any upside. We don't have any cap on them. So you can see compared to yesterday, they're moving the right direction. Google especially and JP Morgan are moving the right direction, but we need Coinbase to continue rallying, Amazon, AMD, AI, PayPay, MRNY, or MRNA, whatever, and Square. All right, so I'll be back at the market close, and we'll see where we stand on all of these things, and we'll take a look at the single stock buffer report. All right, guys, you have a good day.